Good afternoon, traders. It's about 3:20 on May 13th. My name is Daniel, and this is the view from my vantage point. We're going to talk bonds today. I know the bond king himself, Bill Gross, at one point a couple of weeks ago said something about the bond market expecting to decline in the near future. If you haven't seen the bonds lately, that's exactly the case. Let's see what VantagePoint said about that and when. We're going to start looking, if you can see on your screen, we're looking at the Euro bond. Now remember, VantagePoint is doing global market analysis, meaning it looks at the markets from a global perspective. So looking at the Euro bond is going to give us some information about the bond market. And then we'll switch over to the U.S. Treasury bond. For those of you that are trading that market, you can see exactly what I mean by global market relationships. So before VantagePoint generates a forecast for the Eurobond in this case, it's looking at 25 other markets that might influence this market. Let me take a look. I'm going to go over here. I'm going to put in the Eurobond over here in my market tree so you can see exactly what I'm going to. And there's the Eurobond. If I go into the properties, there's 25 markets on this list that you can see. There's 25 markets. The 10-year U.S. Treasury note. Charles Schwab, that's obviously a stock. The Dow, there's a Forex pair. The Euro dollar, another interest rate. Gold, a futures market. You can see a list, just a litany of ETFs here. The Japanese yen, another currency. JP Morgan Chase, another stock. So you can see that there's 25 markets on this list ranging from stocks, futures, Forex, ETFs, everything has an impact in this case in the Eurobond. And VantagePoint has figured out what those 25 markets are, what direction they push the Eurobond, and to what degree. Now, it's hard enough to find those markets. It's hard enough to figure out the direction, but to what degree? That's the power of the neural network, the patented technology that VantagePoint utilizes to generate the forecast. I wanted to pop the hood on this thing for you a little bit so you can see those intermarkets and how the global relationships are being analyzed every single day right in VantagePoint to generate a forecast. Really quickly, before we talk about the fall in the bonds, let's talk about how you interpret this chart. You see a blue line, a black line, and a green line on your chart. Let's talk about that blue line. That is a predicted moving average, and that's giving you an indication of the overall trend of this market 1 to 3 days in advance, depending on where it lies compared to the black line. If it's above the black line, that's indicating an uptrend. If it's below the black line, like over here in April, that's indicating a downtrend. So in this case, back here in March, you can see VantagePoint indicated this trend was going to start going up. You see the blue line above the black line on this day. The first thing you want to do is get confirmation. You look down. You look at the green line. That's a predictive indicator. It's called the Predicted Neural Index. You can write that down. Right next to it, write PNI. It's a short way to talk about the Predicted Neural Index. It's an oscillator that's indicating short-term strength or short-term weakness. When it's up here in the 1 position, that's indicating strength. When it goes down to the 0 position, that's indicating weakness. Now, the first thing you want to do when you see a crossover where the blue line went above the black line is look down to get confirmation. You want to see this green line, in this case, up here in the 1 position. You do not have confirmation. Now, remember, you're trading your hard-earned money. There's no reason to take unnecessary risks, even with predictive information. Wait to get your confirmation. When you get the confirmation, the blue line's above the black line and the neural index is in a 1 position, that's all lights are go, green. You can see that there's multiple predictive indicators saying there's an uptrend coming in this market. If you got into that position and you traded it from crossover to crossover, you see it on that day and you take your exit the next day, that a market opens up, you take your exit, and there you go. 1.26 points in 15 trading days, 1,200 euro per contract. Now, here's the key. Here comes the fall of the bond. The blue line crossed below the black line. You got a clear indication right there on that day. You look down, where's the neural index? Remember, the PNI, you wrote that down. It's down in the 0, indicating short-term weakness. At that point, VantagePoint's indicating this trend is going to change direction and it's going to start going down. Now look what happened. The blue line stayed below the black line all the way through. This is the closing bell. The last time we updated the data yesterday, last evening, you're up 6.86 points in the Eurobond, 14 trading days with a profit of 6,800 euro. Right there in 2 trades, you're talking about making 7,000 euro very quickly, very easily. You can do the conversion to dollars and see that very quickly you recoup your investment in VantagePoint in just a couple of trades. If I highlight this date right here where the crossover happened, that's April 21st. That's when VantagePoint indicated this market was going to start trending down. Let's go check out the U.S. Treasury bond for you guys trading stateside. The blue line went below the black line. You can see it's clearly below the black line on this day. You look down, you get your confirmation from the Neural Index, and you can see that that's April 22nd. So the Euro bond fell first. In this case, now we see the Treasury bond fall the next day. And since then, the Treasury bond has gone down for weeks at a time. We're talking about 14 trading days. Over 8-point drop, $8,800 per contract in the U.S. Treasury bond. That's a ginormous move. And if you had VantagePoint and you were able to get into that position and take advantage of those profits, you can see just in 3 trades now you're up $15,000 or more. VantagePoint is going to give you advanced notice of these kinds of trend changes so you can get in the right direction and make profits consistently. On top of that, VantagePoint is going to help you protect your positions by using this little floating candle out here to the right. This is a predicted high and a predicted low for the next trading day. That's important because when you've got $8,800 in profits, you want to protect that profit, lock it in, and move your stop within a few points or so, not too far outside of that predicted high, because if it does change direction outside of the predicted trading range, you want to get stopped out. You want to lock in your profits and take as much as you can out of that market and look for a re-entry. So not only does VantagePoint give you the overall trend direction, gives you the strength of that prediction as well as indicators that are predicted to help you protect your profits and your capital, because that's rule number 1 of trading. Preserve your capital, then build your wealth. And I hope you can see very quickly and very easily how now VantagePoint is going to help you do that going forward.